Well, it was a busy week for the economy. And here to break it all down for us is financial markets economist John Lonsky and tax attorney Rebecca Walser. Thank you both so much for being here today. The economy bounces back to a 3% growth rate, but the latest jobs numbers were less rosy. And then things took an unexpected turn. Following the weak jobs report, President Trump then ordered the dismissal of the Commissioner of the Bureau of Labour Statistics, Dr. Erica McIntyre. So here's the president quickly talking about this to Rob Finnerty. We're going to roll that tape and then get your opinions.
Well, it's a Biden appointee, and we've had problems in the past, and we had problems even before the election. You remember those wonderful results that were put out just before the election, and everybody said, where do they come from? Then I think they adjusted it after the election, and we had some difficulties with her, and there have been a lot of questions, and we fired her because we didn't believe the numbers today. Even though interest rates are too high, we have a terrible head of the Fed who keeps interest rates too high. I could understand that, but I don't believe those numbers. I think because we're doing so well, and we fired her. This is not something from just now. This was before the election.
All right, John, does a jobs report warrant the firing here?
Really sure about that. You know, what's happened with the jobs report is that people have to realize they don't go out and count every single job in the U.S. economy. What they do is they send surveys out to employers to come up with some estimate of how many jobs were added to or lost during a month. And unfortunately, you know, in the past, they used to get a 60% response rate to the survey. That response rate has gone down to 40%. Some blame this on previous cutbacks at the Bureau of Labor Statistics. So I'm not so sure that this is part of some conspiracy. Though I will say, you know, it's kind of odd. We don't see downward revisions of payrolls of roughly 250,000 jobs, 258,000 jobs all that often. And what I was struck by is that a disproportionately large share of these downward revisions applied to state and local governments, especially a number of people hired in public education for state and local governments.
And Rebecca, your thoughts?
Yeah, I think, Sarah, that it's a lot more about the fact that we went from 147,000 jobs to 19,000 jobs in May, and then 144,000 jobs in June to only 14,000. And so just to John's point, it is so unusual. It's almost 250,000 jobs, and or more than 250,000 jobs. And it's just so, you know, we're just talking the last 2 months. And so I think you had two Fed, dissents yesterday, Waller and Bowman, and they both said, hey, this is not policy that we should definitely make a change. You can look at the ISM data, the manufacturing data. You can see a general economic, the tariff policy aside, you can just see that, you know, all of that bringing forward of the orders earlier in the year was to front run the tariffs. And now we've got some slowdown. So I think that is reflective in yesterday's report as well. But Trump, obviously, and the GDP and the 3% is really very positive news. So we have a bifurcated situation with mixed data is really what's happening.
All right. So we have no interest rate cut on Wednesday from the Fed. There's been a downbeat jobs report on Friday. And President Trump hasn't been too happy about these things, as we know, we've just been discussing. So let's look at what he wrote on Truth Social. He wrote, Jerome Too Late Powell, a stubborn moron, must substantially lower interest rates now. If he continues to refuse, the board should assume control and do what everyone knows has to be done. James, what do you think about that?
Bit heavy for the morning, isn't it? Look, I think that the benefit from Trump of this jobs report is that it is going to increase pressure to cut those interest rates. I suspect that he is eventually going to get that decision from Jerome Powell. Look, in terms of the polling that we've been doing at JR Partners, we've actually found that voters are the most positive they've been about the economy since the inauguration at the moment. Now, they're not that optimistic. You know, this is relative. Now, that may change in the coming weeks and months, but I think the point the lady just made there is absolutely right. There is a long tail here of some of the tariff impact. Let's see how it falls out. I don't think it's time to press the emergency button just yet on the American economy.
Okay, good to hear. But speaking of tariffs, early this week as well, Trump said that the tariff deadline would not be extended, but then gave Mexico reprieve because he's been negotiating in good faith. Madeline, what do you think about moving the goalposts here? Is it reasonable?
I don't think that Democrats are doing themselves any favors by focusing on deadlines.
Yeah.
We just want a good deal. That's really all that matters. I think the primary issue here, though, is that if we do lower those interest rates, if we don't start building up goodwill with our potential trading partners, then really what we're looking at in the future, actually Wharton, where the president went to school, has predicted that there'll be 6% decrease in GDP over the next 10 to 20 years, and wages will be down by 5%. So we definitely need to work on making sure that we're not setting ourselves up for a bad problem in the future.
All right, yeah, good points to be made there. We do have to leave it there, though. Rebecca Walser and John Lonsky, thank you both so much for joining us today.
Thank you.
All right, and special guest.